Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Market for Wednesday, the 21st of July. Starting off with Argo Blockchain, which has become a bit of a spectator sport. We had that old 96 pence low there from May, and that normally would be regarded as a decent pivot on the price action, but actually what's happened is we've seen the shares oscillating sort of 10p either side of it, which is not actually very helpful at all. What was more helpful, though, was the rebound this month so far into the floor of the January gap there at 82.5 pence. I think the low exactly at that level so far. So that's one box tick for the technicals there, or the charting aspect there. As far as the other level, 82.96, and then up to the 200-day moving average at £1.15. But we'd like to see an end-of-day close above the 96 pence level, although we did actually have a false dawn with the close above it, and then we came back to 82 again. So not particularly that helpful, but I suppose really we're in the range of 82 to 115 with 96 almost a side issue at the moment. But closing above that, maybe on a 2-day basis, could give the bulls confidence that we're finally out of the woods in terms of the pullback from £3 plus that we had in February. Onto a stock that doesn't normally make the grade here, but it's here in flying colours, Ardent Partners. We've got a situation where the shares have broken out quite comprehensively through that old March peak. That was around 17 pence. While we're above 17 pence, looking towards the top of the rising trend channel from September last year, as high as 33 pence, and that could be seen as soon as the end of next month. Bull argument very much in place while we're above 17, only really back below the 50-day lines, 15-16, really questioning the breakout argument. But a nice saucer base there for the share, so it doesn't look as though this situation has legs. Onto a stock which looked like it was going to hit 50p plus just a couple of weeks ago, but came back to test the 50-day moving average, as is quite common for shares to do. We'll see more of that later in this particular charting video, but bounce for Dev Clever off 33 pence there at the 50-day line, and while we're above that, initially up to the former support there at 38, and then hopefully back up towards the recent highs maybe over the next few weeks. Top of the channel there, heading towards 55 pence, which if all things go well, one would expect to see by the end of next month. This stage only well below, I suppose, the 50-day line, so it's sub 32 pence, really questioning or delaying the upside argument. Onto a stock which had almost maniacal fans a few months ago, but things have sort of cooled off a bit for Gene Drive. But another attempt for the shares to break higher. We've had this will be third time luck if we manage it. I think we had a couple of bull traps both in April and then in June. So let's hope it's the third time lucky here. If you want more confidence in the whole sort of recovery argument, then maybe you wait for an end-of-day close above the 50-day moving average at 59 pence. But the break of that falling wedge from March around 52 does suggest that while we're above the 50 pence area, we could head up to the top of the range and the 200-day line around 75 or 76 pence over the next few weeks. On to stock which is I suppose defied the odds in terms of its recovery. I don't think many people were expecting Hurricane Energy to bounce back, but it did very well last month. Bit of consolidation that we've had so far this month, but it's been a bear trap rebound from below the 200-day moving average at 2.6 pence, and above that looking for a retest of the best levels of the year to date towards 4.5 pence, maybe by the end of next month. Only really back below 2 pence, really killing the idea of ongoing recovery for Hurricane. Sticking with the same sector, and we've got i3 Energy here, which another of those situations which has bounced off the 50-day line, so the 50-day line here at 10 pence, and reasonable reaction. I suppose that was the old resistance on the way up, 10, 10.5, so that sort of ties in, and the longer we can hold above 10, the greater the chance of a retest of the best levels of the year to date, around 16 pence plus, perhaps as soon as the end of next month. We've got the 50-day rising and the 200-day line rising as well, so it still looks like a pretty strong chart, with especially with the bounce off old resistance, which is normally a plus. On to KR1, which because it's on Aquis, doesn't get too much charting attention, but here we are, just celebrating the bounce for the stock off the 200-day moving average at 98 pence. The longer we stay above that, the better the chance of a move back up towards that resistance line there from February, as high as £1.40 plus, and that could be seen by the end of next month. We've also had a narrow bear trap from below the 99 pence low of June. Yesterday's low was down at 98.5, so a narrow bear trap there. Another positive for the bulls to latch onto. Mobility One has behaved itself as well. We've had a pullback, I suppose, from the best levels last month, but good constructive behavior here in the low 20s, which was basically the May support area. Be nice to see an end of day or a weekly close above the initial July resistance, which was at 31 pence. If you can get that in the next few days, let's say, then 50 pence or a retest of the best levels of this year could be on the cards by the end of next month, given the way that when the stock moves, it can really move. Stock which is rather obscure compared to Mobility One, and probably pretty obscure compared to most stocks actually, is National World. Here we've got the shares building on the breakout that they delivered last week. Want to see an end of day close through the recent high at 34.9 pence, which we could get if the shares stay where they are now. Guessing where the top of the channel is, which would take the shares up to 53 or 54 pence at the top of that May channel, if that is indeed where the channel is. Obviously, we don't have much data, so it's all a bit of a guesstimate on that upside. This stage only well below 25 pence, and former resistance for the shares would delay the upside scenario, but it looks like we've got a step ascent for the shares, which is one of the most bullish things you can see in charting, and we'll see another one of those in a couple of stocks' time. On to Rockfire, which again was a very popular stock, I think, last year, but here we've continued to build on the break of that late January resistance line there at 0.9 pence. Above that, we're looking for a retest at 1.6, 1.7 pence. The other plus point at the moment is it looks as though we're in the run-up to a golden cross between the 50-day and 200-day moving averages, maybe in the next week or two or less, and that tends to be the strongest part of the cycle for a stock or market, so that gives added juice to the idea that the shares are going to return to 2021 highs. Stock which again is obscure but also has a very positive looking chart is System 1 Group. Don't think I've looked at it before, but we've got that step ascent, so from November, then flat in December through to April, then another step up and then flat, and that's the sort of pattern that you want to see if you can get it, because that tends to be the strongest one in the market. It just shows that there are basically no sellers of any kind around in the stock, and obviously it looks like it's pretty tightly held as well. Added dynamite there as well, the unfilled gap to the upside through resistance that we had in April. Never got close to filling that as well. So the bottom line here is above April resistance at £2.66, £2.60 rather, looking for a top of broadening triangle target from September up towards £4.13, and that could be seen as soon as the end of next month. Obviously, the spread here and the liquidity may be issues for some traders. Finishing off with a stock, another stock which looks like it's rehabilitating itself at the moment. Bear trap rebound from below the 50-day moving average at £1.16 for Tirupati, but also the story of the shares bouncing off, or bouncing just below the last gap there from June. The gap there at £1.10, so basically a gap rebound, or bear trap gap rebound, and that could be enough to take the stock back up towards the 140s or 150s over the next 2 to 4 weeks. Want to see an end of day close above the 50-day line just to seal the deal on potential upside. That's it from me today. More updates tomorrow.